Good day, everybody. My name is Ted Gardner. I'm one of the portfolio managers on the Westwood Salient Energy Infrastructure team. Today, we're just going to walk through some of the highlights from the month of October. Overall, it was a very good month for the energy infrastructure space. We saw both of the broader indices, the AMNA and the AMEI, both up pretty nicely, 5.7% for AMNA, 3.8% for AMEI, and that brought the AMNA to 34.6% year to date and 33.2% for AMEI. The AMZ lagged quite a bit for the month and for the year to date, so they were down on average 1.3%. MLPs, however, lagged for the month, with the AMZ down 1.3% and also lagging quite a bit year to date at 17%. And I'll talk a bit more about that in just a moment. Broader energy, a bit more spread out, was flat to down for the most part, depending on which sector you look at. The clean energy names, once again, got hit pretty hard. And we've seen that for the year-to-date period as well, where we see the solar ETF down 25% and just the broader clean energy down 15%. So it's been a rough year for those names. On the commodity side, crude was up 1.6% for the month. However, it remains down slightly for the year. And then natural gas got hit pretty hard. This is a very seasonal trade, and you can see volatility in any given month based just on weather forecasts. So October, we saw it down 7.4%, but we've had a pretty big rally thus far in November. So again, it's a very volatile commodity. And then the global LNG markers were both up for the month. When we look at the three different buckets for the names, we really, as I mentioned a moment ago, it really was the C Corps that outperformed. So both US C Corps and Canadians were up both. When we break the returns down into buckets, we saw both the Canadians and the US C Corps up more than 5% on average. On the US side, it really was the natural gas names, Williams and DT Midstream, that were up almost 15% each. And then Targa, which is more of a natural gas liquids name, is up about 13% during October. On the downside, the Plains C Corp tracker was down over 5%, and then Antero Midstream and Aris were both down as well. Canadians, again, had a very big month, up 5.9% on average. That was led by the South Bow spinoff, which was effective on October 1st out of TC Energy. So it traded very well during its first month, up 18.9%, as did TC Energy, up 10.6%. And then on the downside for Canadians, really only had one name that was down slightly, which was AltaGas, down 60 basis points. The MLPs, however, were a different story. While there were a few names that were up, like the Cheniere MLP, Cross America Partners, and Energy Transfer, we also had some meaningfully negative returns out of Genesis and Delek. Genesis disappointed on earnings, and Delek actually had another secondary that their parent company brought to market, which knocked the stock down a bit. Year to date, a similar story where we see the C Corps and the Canadians leading quite a bit. The US C Corps are up 36.1% on average. Aris has doubled for the year through October. Targa is right behind it at 96.5%, and then DT Midstream's up 70% year to date through October. The worst performers are still pretty good. So Cheniere is the lowest at 13%, but when that's your worst return, you're in pretty good shape as a group. On the MLP side, again, lagged quite a bit at 11.4% on average. Did have a few names that are up quite nicely, like Western Gas up almost 38%, NPLX up 28.9%, and then Energy Transfer up 27%. But then we have on the other side, Sunoco that's down over 11%, and Delek that is down 3% through October. So then on the Canadian side, TRP, or TC Energy, really has had a very big rally since the summer started and is now up 44.5% for the year, followed by Keyera at 39% and Pembina at 33%. And then on the downside, again, not a bad year when your lowest stock is up 21.1%. So that's Gibson Energy, which is the laggard, if you will, for the Canadians. So I've already mentioned a couple of times that MLPs have really lagged. And that really was the case beginning in the third quarter and went through October as well. So when we take a look at just the relative valuations between the two, with those C Corps moving, we're now at a spot where we were back in late 21, early 2022, where the valuation spread between the large cap C Corps and the large cap MLPs is very wide, up around 2.5 times. And if you look at previous peaks in this, you saw periods then where the MLPs outperformed. So as we saw during 2022 and 2023, the AMZ really outperformed both AMNA and the AMEI. Just to give you a few examples of that spread. So if you look at a name like TC Energy, that once again, as I showed you on the prior slides, has had a very good run year to date. The valuation on that, looking at 2025 numbers, just using enterprise value to EBITDA, is right at 13 times. You compare that to, say, an enterprise that's in the low 9 times range, or even an Energy Transfer that's down around 8 times. We feel like there should be a catch-up trade for those names, because while they are MLPs, they are still, in our opinion, as high a quality and as big or bigger of a company than what we see with names like TC Energy and some of the others that have rallied that are at those higher valuations. So the question is, why are we seeing the C Corps really outperform? And the real answer is that C Corps or 1099 stocks are really a lot easier for generalists, for institutions, and especially for international investors to own than an MLP that throws off a K1. So we've heard quite a bit that there are generalists and international investors coming into the space through those names. And why are they buying the natural gas names specifically? It really comes down to the natural gas demand growth that's expected now through the end of the decade, which really has been a product of the artificial intelligence growth that just started being talked about earlier this year. So we've been talking for a few years now about the LNG demand that's increasing, really starting in earnest next year. But right now, we're exporting around 12 BCF a day of natural gas or of LNG. If we just look at the projects going forward that are in process, been approved and all that, that's an additional 12.5 BCF a day of demand. And then if we add some other projects that are probably going to happen, that's north of 10 BCF additional. So by 2031, we could have about 23 BCF a day more of natural gas demand from just the LNG trade. And then you add on to that the AI demand that, again, has just started coming to the fore. And to be fair, there's a wide range of estimates there because we are in early innings of getting it contracted. We've seen some nuclear contracts. We've seen all kinds of things. So we're not real sure yet just how much of the share will be from natural gas. But base case, and these are Wells Fargo estimates, they're at 7 BCF a day of growth by 2030, but it could be as high as 16 BCF a day. And frankly, we've seen other research shops that have 20 BCF a day or more of demand growth through the end of 2030. So you've got quite a bit of demand growth there. Call it 20 BCF on the low side if you just use the base case plus the LNG projects that are coming online. And it could be north of 30 if we are in the high case. So that's really what's been driving the trade for the natural gas C Corps. Again, much easier for the international investors and institutional investors to express that trade through the C Corps, which again is why we've seen that gap on valuation grow between MLPs and C Corps. Thank you for your time today. Please reach out to your Westwood representative with any further questions.